All right, thank you, team. Katie, welcome back to F.A.C.E. I saw you
Thanks
on
so much, Dale.
CNBC the other day. You're
Yeah,
getting
good
better and
morning.
better. Yeah,
Well, July was definitely a tough month. We've had such a persistent bear market that relief rally definitely caught me off guard. So now we're just kind of pressing the reset button and trying to understand how long it can last.
okay. Well, I know that your understanding comes from pictures and,
Mhm.
the charting action. So you want to share your screen? Picture
Yep,
speaks 1,000 words. I know we try and describe it, but okay. So we had that low right before the solstice in
that's right.
June,
That's right.
and now don't you think we're at a battleground area here between at 4,200?
Yeah, so listen, there's so many resistance levels we could use as a point of reference.
Yeah,
This is a weekly bar chart of the S&P 500, and it shows the magnitude of the relief rally. You can see
yeah,
here was our sort of last oversold extreme, and
yeah,
now it still is supported by these stochastics, which is really
yeah.
what we're primarily watching now to get a sell signal. And we do think that sell signal will happen fairly soon, within 3 to 4 weeks, and that will be our opportunity to reduce and avoid the next down leg to this bear market cycle. In terms of levels, I almost feel like, I mean, we should definitely be paying attention to levels for the S&P 500 and the major indices. Sometimes the exercise can be somewhat futile from a bottom-up perspective. I've got a lot of people asking, about levels on individual stocks, and I sense that
Okay.
because the market's still so top-down in its orientation, that we'll
Yes.
see pretty much everything top around the same day. So I'm not getting terribly caught up in the levels, really more adherent to the indicators and letting them guide us. But for the S&P 500, we've been vocal about this 4270 level, which you can see is the lower boundary of the cloud. The cloud is defining the downtrend that is, in place as of this year. And it shows it to be going down all the way through about mid-February, looking out a few months. So we are making the assumption that the downtrend will keep its hold. It doesn't need to be right at 4270, of course, where this relief rally peaks. But that is definitely a hurdle on the chart in our work. 4,200 was an old Fibonacci retracement level that you can see, and also a former support level. So there's just a lot of overhang here, I think, for the market in terms of potential supply. And we'd be very, very sensitive to any downturns.
Okay. What would change your mind that perhaps the bear market's over and there's a shot for new highs?
Yeah, and this really comes from the longer term indicators. We want to see something more out of them in the way of, improved long-term momentum, a
Okay.
retest type of process, some kind of retest of support, and that would also manifest itself in these monthly stochastics that you can see here. So what we've noticed is the indicators are really at their worst since 2008. It doesn't mean we have to see that kind of downdraft, but it does tell us that this is more likely not just a correction, but rather a bear market cycle.
Okay.
And as you know, those tend to last more than 7 months or so, which is where we are right now. If
Average
you,
length of a bear market is what, Katie? I know you have the
we
stats.
don't have a huge sample size, right? So
Okay.
we're using 2008 and also 2000 as our cases in point. And,
Okay.
we're talking a year and a half to even 2.5 years. So
Okay.
hopefully that's not the case this time around. We do believe that this is a secular bull trend. You can even see that in the monthly cloud. But if you notice this first oversold reading in the monthly stochastics, while that's something that is a step in the right direction, if we're indeed in sort of a bear market cycle, that first oversold is just an early indication, and certainly too early to be buying from a long-term perspective. So these first oversolds often see retests or a more prolonged oversold reading, and this goes back farther into history as well. So we see the oversold. We're not that encouraged by it. We think it's just one step in the right direction. And where
Okay.
it would be more impactful is if we actually see long-term momentum tick up meaningfully. And so this MACD
What's
histogram
that
here,
there?
yeah, notice how in 2009, you just started to see it
Right.
consistently
Yeah.
narrow, right? So it's a converging MACD indicator. And back here too, it's like we want to see more of a process, a bottoming process that will lead to the improvement in those indicators. Now, we're not ones to fight an uptrend. So if we do see breakouts and we do see the improved intermediate term momentum, just kind of stick with the market, well, then, we'll stick with the market too. But for now, it seems like we have an intermediate term low, not a long-term low.
Okay, so maybe, cyclical against secular. But
Mm-hmm.
secular bull market is what you showed on the monthly. I'm curious as to whether you think yields in the bond market after this real nice rally, I think we touched on them last time we were together, and
Mm-hmm.
you felt they had some more downside left, but you were starting to pay attention to them. Is the bond market reinforcing your bearish view on the market that it's not going to be really rates that take the market down this time? It's going to be recession fears and earnings per share contracting in the third quarter.
Mm-hmm. Mm-hmm. I think the charts aren't going to answer why something's happening, unfortunately. So I'm never the best person to answer,
Okay.
the macro
Well,
sort of influences. But when I look at Treasury yields, I think I'm a little out of consensus on this too. I feel that we don't have a major peak in place, but rather just sort of an intermediate term high. And it came at a very natural place. This is the 10-year Treasury yield on a monthly. It came right around that 3.25 resistance level. So that resistance is still intact. It's roughly in here from the 2018 high. So that was a natural place to see consolidation. And if you know the DeMark indicators, you'll know that these nines mean 4 bars of consolidation. So we're in bar 2 of that consolidation. So our call has been for some counter trend action, which is what we're seeing in 10-year Treasury yields for another couple of months, after which we believe that the longer term uptrend that asserted itself in 2021 will resume. And we think it will resume as opposed to reverse like we saw back in here. The reason for that is we saw a breakout from a multi-decade downtrend channel in yield terms. So this uptrend is far more significant in our work than this uptrend was, because it cleared this kind of trend channel that had been in place for so long. So we think that we've seen it sort of a major reversal here from a long-term perspective. And with that in mind, we'll assume that it's going to ultimately reassert itself, the uptrend.
Could you see it near term having problems at 3% and maybe we're going to pull back to 220 and then blast to new yield highs?
Yeah, so those are definitely levels that are somewhat important short term. If you see the daily cloud, we're watching this as a short term overhang. That's between about 305 and 310, and then there's an important Fibonacci retracement level at around 228. There's a lesser one that we've been focused on of 259, which we think is serving as the staging ground for this minor recovery here with a minor DeMark signal as well. So we're looking for basically more kind of backing and filling around this, or probably just sub 3%. More of a neutral bias, which is always the most frustrating bias to have, because people want you to assert like a strong directional bias, but in reality, I think it's going to be more choppy sideways.
Could you have a strong directional bias in the dollar and precious metals?
Yeah, so the dollar obviously has been in a very well-defined uptrend, and its pullback, it was pretty orderly. If you look at the dollar index, it came right into its 50-day moving average again, and seems to have reacted already to the short-term oversold reading there. It's a very clean kind of picture, very similar to what we saw here. So we're assuming that the dollar uptrend will keep hold, but there are some indications that it should kind of moderate a little bit. The steepness of the uptrend is unlikely to stay that way. We're just seeing some early indications from an overbought, oversold perspective. And there was some resistance around 109 that to us was a natural place for this to happen. So
under 105 would not be a good sign, would it?
The cloud actually is a little bit more forgiving than the 50-day. So I would say as long as it can kind of hold the cloud does rise to about 105.30 when you get out to mid-August. So that is a level going forward, but right now it's a little bit more forgiving than that. And as long as that cloud is intact, I would assume that the year-to-date uptrend is intact as well. For
So
gold,
you think there's a higher probability that the trend's intact and we could make a new high in the dollar?
yeah, ultimately, I don't think a new high is imminent, but yes, I think we should assume that this uptrend's in force and intact. And the euro discovered support right around parity, right? So it was a very natural place for that pivot to happen, but it just isn't really showing any long-term signs of upside exhaustion. And of course, gold, it got very deeply oversold, as the dollar had rallied, and came into some key support. And this is a longer term level. I was interested in what you guys were saying earlier. It feels like a very significant relief rally off of this long-term support, which is roughly 1675. You can see it best also in the monthly chart. It's a Fibonacci retracement level. And then notice also it's come into that monthly cloud. So it's pretty interesting as it comes off of that level. Listen, I don't think that we're going to see it run away from us, but I'd say that the bias within that trend channel is higher, noting that we're seeing that reaction to an intermediate term oversold condition. And we think that it would be a natural place for gold to start outperforming again fairly soon versus the equity market. So it's had defensive properties, as you know, year to date. This is gold divided by the S&P 500. And if you see this relative strength ratio and its 200-day moving average, it does suggest that this corrective phase will ultimately give way to a little bit more of that kind of flight to safety into gold. Even if it's not imminent, it does seem like it will ultimately happen.
Do you pay attention to the gold silver ratio? Because that had a very big week last week with silver showing relative strength over gold and took it down.
Yeah, I don't track it super closely. Okay. But listen, like all of this will help us understand risk on, risk off is my takeaway. If I had to choose between silver and gold, I would go with gold. And yet, if you look at silver, what we think is interesting here are the DeMark signals. So silver actually has a buy signal that's active on the weekly DeMark work. And this is the generic contract. And then notice also the ratio versus the S&P 500 has a DeMark signal. So a short-term counter trend signal that we last saw in December. So we are looking again there for some rotation into these precious metals. But we have a bit of like a new theory that we've just put out there in our research as of this week about commodity prices more broadly. You remember the old CRB index? Well, yes. We're still watching that one. And if you look on a monthly chart, I'll pull it up here. You can see there's actually some long-term signs of upside exhaustion. So while we think energy prices in particular, which are really the driver of this, we'll see a more of a rebound here in the near term. In fact, crude oil, WTI, has a DeMark buy signal near its rising 200-day moving average. So that's our near-term focus, is more of a relief rally there. But if you look long term, this is a monthly CRB index chart. Look at this monthly MACD. Look at the monthly stochastics having rolled down. Look at this DeMark signal. And the last time we really had that setup was back here. So early 2011. So I suspect that what we'll see is with the energy complex, at least, is that we'll probably see a lower high versus the recent highs, and that will become a selling opportunity, and that there's risk that we get into more of a prolonged kind of corrective phase there. We've been very bullish on energy, especially in relative strength terms all year. We have our ETF, and the ETF only has sector exposure to energy and utilities, but we suspect that energy will ultimately lose its upside momentum.
Okay. So energy is in a void, and any attractive areas? What do you think about biotech in this environment? Any view on that?
Yeah, and to be clear, I mean, energy would stay long right now. So short term,
stay long.
Yeah, short term bullish, but longer term showing signs of exhaustion. In terms of looking for spots of strength, we always prefer areas of the market that are in long term uptrends. And we talked about energy. Utilities is really the only other sector that can be considered to be in a long-term uptrend. And yet,
2 out of 1,000, huh?
I know there's really not many of those out there.
Yeah.
And it's frustrating because as a technician, it's against our better judgment typically to recommend anything that's really counter trend in nature. But we of course have demand for that from our subscribers, and we're watching the same things everyone else is. That the high growth arena is pretty deeply oversold. I mean, we have, I'll just show you PayPal as just a case in point. These higher growth sort of technology names have gotten deeply oversold, and they're starting to react to those oversold conditions. But I still think it's quite early. So we had some DeMark signals here in PayPal on a monthly basis. Here's your prolonged oversold and a minor uptick in the histogram. So there's some early indications there of a basing phase developing, but basing phase.
So the long side are trades.
Yeah.
Just trades, right? And not positions.
That's exactly right. So short term, you can take advantage of some breakouts as they unfold. But longer term, I think you have to trust that these basing phases are processes, and they often are characterized by retests of support that can be pretty hard, and even characterized by gaps down. We've seen that in some of the sort of high profile names, whether it's Snapchat or Roku, whatever it may be. We've seen a lot of these gaps that can be somewhat harrowing. But your point on biotech is a good one. I mean, it's one of those areas that does have those signs of long-term downside exhaustion, and it's even a bit farther along than some of the other more technology-oriented sort of high growth arenas. So we have a long-term support level for XBI, a stochastic upturn, and month 3 of a contraction in that MACD histogram. So all of that's very promising. And I think with biotech, you're probably going to be well served by being patient and letting the next pullback at least lend you a buying opportunity. Interestingly, the other area that we're seeing something like this is in China. And so it's difficult for me with my thought that the market's going to extend lower at some point here to recommend China. But I would suggest that this is potentially a long-term basing process that it's seeing as well. Yeah. This is F.A.C.E. You see it kind of came in here, stuck some support, had your oversold buy signal, and now it's getting into retest mode. And that's all sort of part and parcel to a normal basing phase.
Well, they do have a central bank that's easing. Compared to central banks that are tightening around the world.
Right.
Could that be the difference?
It certainly could be. And look at how oversold it is in relative terms to the US. So, and it feels like it's somewhat basing on that front as well. So we'll start to see some spots of relative strength unfold, and that relative strength can obviously indicate where we have the best opportunities coming out of this bear market cycle.
Speaking of bear markets, are you seeing any kind of early encouraging signs in the cannabis space?
Oh, we do track it closely.
Why do people laugh when I bring that up? Cannabis. Well, Katie, come on.
I'm glad you brought that up because we do.
I knocked my bong over. Maybe that's why people laugh. Go ahead.
We actually publish a monthly report focusing on.
That's right.
Yeah, so we and this is not a big focus of ours, but we have it there in part because we know that the industry has come into focus because for regulatory reasons, and there is probably a point at which here, and it could be soon, that it will gain some interest, right, in the public markets because we have more regulatory freedom and what have you. So we want to be there.
Be able to bank.
Right. Yeah. So here's your downtrend. This is just one of the ETFs we track, MSOS. You see the downtrend very clean in terms of those moving averages. We have seen periods of stabilization on improved momentum, but really no meaningful breakouts as of yet. We also like to follow the DeMark indicators here, and we don't have any major signs of downside exhaustion. Okay. So I would say, at best, we can say there's been a loss of long-term downside momentum in some cases, but it's falling short of confirming these DeMark signals that are starting to pop up. So I think here too, it's a bit early, especially in this weaker tape. But that eventually, as soon as we see some of these minor resistance levels cleared, that we want to take that opportunity for face value, because as soon as momentum kicks in, you can imagine, given such a high beta space, that there should be some real potential here for outperformance. So we're
Plenty
watching.
of shorts to squeeze too, I bet.
Right. We're watching and waiting for that, and
Okay.
we're ready for it. But, for now, the research is a tad depressing.
Okay, so you could get Katie's report. You want to show us your website where people could request
Sure.
that report if they have an interest in that sector, and of course have an interest in your work.
Yeah, for
which is
sure.
very disciplined and
Thank
top
you.
shelf in my view.
I appreciate it.
Strategies.
So this is just our fairleadstrategies.com. And here you can see the cannabis, crypto, equities. Equities is our really foundational research. We also added a Substack newsletter called Idea Generator, where we essentially put out just ideas. And it's become much harder in this environment to find those high conviction ideas. But we really have something for everyone in that regard. And you can find more information about our ETF here as well.
Okay, well, Katie, one of the best technicians I know, hardworking technician,
Thank
and implement some great tools to mark and clouds, and you always clarify what the weather looks like in the markets for us every time you come here, Katie. We appreciate that.
Thank you so much.
And you can follow Katie at Stockton Katie on Twitter, and really appreciate you being with us. Have a great rest of the summer trading season, and let's get back together in the fall. My trading warrior
sounds
sister.
great, Dale. All the best to you guys. Take care.
All right. Thank you, Katie. All right. Katie Stockton, everyone. People are thanking you. And you could join the team in, 20 minutes on the Morning Edge, and really appreciate everyone's attention. And tomorrow's the big day. Don't get nervous about the NFP, because it's no frickin' problem for us to react to the reaction. We'll do it tomorrow. If you don't believe me, be here. Thank you, Alexander, Steve, Paul. See you guys. Adios. Laura, Paul.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.